Hello, champions, and welcome back to Forex Academy, where we train you to become structured, smart, and spiritually disciplined trader. I am Joseph Samuel, your instructor, and today we'll be tackling market structure sell model. Okay, but do us a favor: if you have not subscribed to this channel, kindly click on the subscribe button, like our videos, and help us share to your friends. Right? Okay, so if you have ever bought at the wrong time or missed great sale trades, in this class we teach you how to identify a bearish trend structure, okay? The difference between a retracement and a true reversal, and where to enter sell trades, possible candlesticks confirmations that signal strong selling prayer. Most importantly, risk management. Risk management, all right? So let's get straight into it. What is sell model in market structure? What is sell model in market structure? A sell model refers to a bearish market structure where the price is consistently going lower. Please, we understand that there are three states of the market, right? We know that there's buy, there's sell, and there is consolidation state of the market. We've explained what buy is, right? If you've not watched the buy models video, you can go there and you see the link in the video, either any side of the video, or you just go to our playlist. You see the buy model structure. Okay, so for sell model sell model structure is characterized by lower highs and lower lows. That is, when we see a continuous break of market to the downside, right? You see continuous break of market to the downside, right? So if market keep doing this, you will know that market is selling. Well, market will not continue to do this for you repeatedly. It will do manipulation, it will manipulate you, it will come and take out a high like this before going again in the direction. And you feel like what's really happening? Like something like this and come down again. And you feel like are we playing here? Are we playing here? Are we playing here? Market will not just be giving you consistent lows like that, like it's been taught in general market structure, right? Market will do a lot of things, like nobody wants to give you money. The financial market don't want to give you money, so it's like for you to wise up and feel like, oh, you really understand the game and you want to stay, you want to remain in the game, right? So we know that each market keeps creating this break of lows, series of lows. We know that each break is called break of structure, right? BOS, right? And we know that this is the impulsive leg, right? That is the leg in direction of the trend is the impulsive leg. Why the going back is what called the retracement, okay? And this is another impulsive leg. Every impulsive leg breaks structure. Every impulsive leg will lead to a break of structure. Why retracement will fail to break structure? Please take note, right? So, and that retracement, they are also shallow and rejected at resistance zone. They are shallow and rejected at resistance zone. So you must know it. So sellers are actually in control of a sell market, right? And buyers are getting weaker. All right. So here's how price flows. In market structure. There's what called distribution. That is, market will move sideways in a range. Then buyers will think it's going up, but smart money is preparing to sell. Let's draw the schematics. Let's see it here. What is this? All right, so distribution. Market will do like this. Bang, 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 bang. Down. So market will be doing something related like this. Okay, keep forming sideways movement, and after a while, it will just be doing just small. You feel like small market consolidation, but if you check the trend, you look at it, it's going up to an extent, and after a while, market just like this, right? Those who are actually buying, right? They'll put their stop losses at this place. below the lows, right? They put that down and be targeting maybe any high and the like. So market will just manipulate it with a spike and just come there, boom, and once it comes there and breaks like this, it will now do something like this, and now you will not be crying. If I had known, there's nothing if I had known. If I had known is if you have known this our model. So we're explaining it step by step, step by step, step by step. So after that, it creates this shift in market structure, right? Shift in market structure, which is also a change of character, and market now do a break of structure. You wait for the retracement up, then you enter for a downtrend. Then you enter for a downtrend. Sorry, 1 minute. Thought I picked my tools. Then you enter for a downtrend. Okay? So I'll repeat myself. First, break of structure to the downtrend. Price breaks a recent lower low or higher lows rather, and then lower high formations. Price pull back into a supply zone. Other block of fair value gaps. We've not talked about that yet. Then the expansion movement will now run down. Boom. Don't worry. We are getting there. Alright, so that's lower low, right? That lower high, right? Will now be your entry. Will now be your entry. Alright, so give me 1 minute. Okay. That will now be your entry. That means this retracement, right? We expect market to form a higher low here, a lower low here, and then that will be your entry. That will be your entry. All right. So now there are also 3 ways that which the market can actually form. Okay. There's some move that can actually form. All right. So let's just tell me out. First of all, you want to see what is called a sweep of liquidity to the upside. So in the upside, possible market is actually in a bullish scenario. Market has been coming like this. It has been coming up. So you always see market create and break this high. When it breaks this high, this become the sweep of liquidity. Market will break this high and then break lower like this. This become your sweep of liquidity. And what do you see? Okay, so this becomes your sweep of liquidity. Market will break it and break it lower. Then you will expect that price should do what is called a retracement like this, which is fails to break the high and then continue in the uptrend, in the downtrend. And what you see is now when price is actually approaching to sweep liquidity, the speed of the market will slow down. The candle formations will be very, very slow, like it will form slowly. Of course, there are times whereby it will form with massive movement and there will be massive rejection, whereby market will just form high weak, right? And just reject. At that point, market will reject and then break lower. Yes. Then there are times whereby the second part, you see that market can be what is it called? Come like this, right? Now, in this point, if we not break the high, it will just break the lows like this straight away, right? That is, it will not create the next higher high. It will just create a failure swing, and it can as well. Market can be so funny. Like you can as well do something like this. Okay, so we understand that each of these break is break of structure, right? So change your character, a failure swing. This will become your failure swing because market fails to break this immediate high and then break lower. So now let's just, without not wasting too much of our time, let's just check our charts and see something cool in that regard. Okay. So let's see this. Now look at this market here. We actually initially we picked a sell at this point here. We picked a buyer. That. So why did we pick sales here? Now see what market did. If you mark out the schematic, you see that market actually did what? Market sweep liquidity. See the market. This is a major high that was created low and market sweep liquidity. Sorry. Market sweep liquidity. This was the liquidity that market sweeps. Take out this high. Right? Though fails to break this low, right? And come a bit. Okay, let's draw it out. Let's schematize it like this. Because your sweep of liquidity very minor. Come here, create an equal top, right? An equal top. These highs are equal. Okay, then break lower. By the time it breaks lower, right? This was when we saw this movement. Then we know that okay, since it has broken lower here, we wait for the market to do what? It trades to this point. The market created a mini low, a high here, right? This high is now an inducement. The market will definitely take out because it's not to 50% of retracement or more, or 62 or 70, whichever one you feel like it. But we've told you that when retracement ends, number one is that retracement must go below or above 50% for a buy, for a sell trade rather. Your Fibonacci must go above 60%, 50%. Secondly, it must form a swing low, a swing high, forgive me, a swing high for you. Then when it forms a swing high for you, at the point of the formula of the swing high, is what we want to see the market, then pick the market. But this one, now this is the swing high now, right? You can see 1, 2, 3. To enter here, you are in. Or we pick it as 1, 2, 3. Though the wick of this candle, this was for our own entry though. This was my entry though. The wick of this candle here is still higher than the two left and right candles. You can see two left and right candles. So we see market coming in like that. And you target this first low. But we actually target here because we saw something. What was it? Below here is about 50 or 60%, 70% of the market. We've marked out this zone. Now, in previous video, we said we are waiting for either this candle close above here, or candle now you are saying that this is a bearish candle. It's not closing below here, right? It's not closing above this candle. But still, we're still watching what the market will do. So if it play out, we target condition to the upside. If not, we wait for confirmations and market in that line. All right. So I think that is a bit clearer. So your entering is the fact that you always see swing highs, right? You want to see swing highs. First of all, you want to see that lower highs after break of structure. Then it's actually in the supply zone. Means it's at the top. When we deal with premium and discount, we understand when markets are at the top and when market is at the down. Markets at the top, that's a supply zone. Then though we've not treated other confirmational entries, but for now use your candlestick, your pin bar, your indecisions as your entry. Okay, for those who understand fair value gap and other blocks, use other block that causes the break of structure. Okay, the other block that causes break of structure, we'll teach that in subsequent video. I'm not explaining that now in this video. Then you can also use fair value gaps for those who understand what fair value gaps is all about. I'm not teaching it in this video. Then possible 61.8 or 78.6% of Fibonacci retracement. Very cool. 61.8 or 78.6 Fibonacci retracement. Very cool. So the best setup often comes when two or more zones are aligned. So you want to see that they actually form those structures and the like. Also, never enter a trade without confirmation, right? Never enter a trade without confirmations. For instance, you want to see that, okay, and then we want to see that the market actually form, you're entering, right? You want to see that possibly forms an engulfing candle. Don't feel like the market is leaving you behind. No, See, if you rush into the market, you will rush out. You will rush out. Market is not here to play with you. So feel that it's wrong, it's going no. For instance, now after this, if per adventure I have missed this entry, though we have other entries for confirmations, but per adventure you have missed this entry, just wait. As soon as market enters your zone, if this was your entry, for instance, where you want to enter for market now, right? You see that the market and the candle engulfed the next candle. See this candle now, engulf this candle, and you enter your sell market. So you see that market actually fails to break higher, right? Forming a double top. We enter here and target lower. From here up, down. Those are confirmations. Don't feel that market is. I don't want market to leave me. Market is not leaving you. I don't leaving the market. You will leave the market last. So calm down. So you want to see like bearish engulfing candle. If you don't understand what bearish engulfing candle is, go back to the video whereby we talk about candlestick morphology. Okay. You want to see shooting stars, or rejection from a supply zone, shooting star or pin bar, right? Or doji, which is a sign of indecision candle. For example, like this one. This is a doji. See, let me remove this. Let me delete this, or just move it a bit. We don't need to get for now. So you see, this is a doji. Indecision candle. You see doji format at a supply zone. That at the close of that doji, you can short and sell your market. Your stop loss above the next high or doji. So then, so let's say, let me just give an example. So let's say you see price break a recent higher highs and forming a higher low, rather, this was same model, a higher low and forming a break of structure. Then price retraces back to a supply zone or OB. The next thing you want to see is a bearish engulfing candle will appear. So let's assume is 1 hour time frame bar. Appear 1 hour time frame. That is a sign for you that the market is here, and that's a confirmation. Okay, it's 1 hour time frame bar. So that's a confirmation. Like what I'm saying now. Like let's look at this one now. Market actually come here, retrace, form a higher low, right? After it formed a higher low, right? We know that market's actually in a premium. So definitely we want to see an engulfing candle, bearish engulfing candle. So what happened? This is a green candle and market actually engulf it. Then what do? We enter at the third candle and we short down. So that engulfing candle is our confirmation for that entry. Though we entered early, we know why. Alright, so and your stop loss will be above the recent high. Above the recent high. Then your take profit will be the next lower low. First of all, first take profit. Possible this low. So we target here. Okay. So always is proper. I've told several times. Don't let your what is it called? Holy Spirit. Don't let your stop loss be wider than your take profit. Okay. So avoid selling market too early. Market will not leave you. Actually, market will not leave you. You will not to leave the market if you rush into the market early. Trade against structure. Trading against structure. That means you are trying to catch maybe a falling knife. Maybe candle is currently forming and you want to jump around to the market. You will lose money. You will lose money. So those are mistakes you should not make. Okay. Another mistake you should not make is ignoring candlestick signal at key zones. Very essential. I've said you don't enter the middle of a trade. Maybe market is coming down like this, and you are here and you want to jump and enter the market. No, you don't jump and enter market. Even if you, except you are very pro and you have understand that no, this market is. But even either you're a pro, you are not even a pro. Wait for the market. Don't jump to enter into trade anyhow, and don't over leverage because you are sure the market is going down. You now open big lot size. Let's be guided though. Let the structure lead you. Okay. Let the structure lead you. Don't just predict anyhow and react anyhow. Okay. Let structure lead you. All right. So assignment for this one, a short video. Not much time. We've talked about market structure repeatedly. Assignment for this one is open your chart, Euro USD, ZAR USD, JPY, any chart you like at all on 4 hours time frame. 4 hours time frame. I repeat, 4 hours time frame. Identify and mark the last break of structure. The last break of structure, new lower high, your entry zone, your entry candle. Okay, then zoom into 15 minutes time frame or 1 hour time frame, and then identify your confirmation candle. This is backtesting, so it's not as if the market will play out for you. Now you are going back to previous chart like 4 hours time frame chart and look at, okay, on 4 hours time frame I identify the major break of structure, okay, a major break of structure, and on the new lower high. For instance, this is the new lower high, right? This is new lower high, right? My entry zone, so probably this is my entry zone, okay. Then my entry pattern is what? My engulfing bar. So this is the 4 hours time. This is my engulfing on 4 hours time. This was the candle that engulfed this guy. This is my engulfing candle. So that's my entry pattern. So my entry pattern. So I'll now go back to 15 minutes time frame. So if I now mark it out like this, so I have market retreat. We just mark out this full candle bar, go back to 15 minutes time frame or 1 hour time frame, and go and look out for confirmation candles. Then take a screenshot, annotate it, and send to us. Then let us know what your SL will be, what your TP will be. Why did you choose that entry zone? We will explain it. Why did you choose that entry zone? Explain it. Then what type of market or what type of candle confirmation or confirmed your sell? What type of market or candlestick actually confirmed your sell? So share it in the group, your notebook or a notebook or PDF. Just type it out and share it, or you just send to the group like that, whichever way you want is convenient for you. All right. So today's class on sell model in market structure is a game changer. That's a game changer. So it helps you to know when to pick market for sales. So I always remember that the most profitable trader don't chase. They wait for structures to bring the market to them. You don't chase the market. So in the next lesson, we'll go further on market structure and psychology. With time frame and the likes. So if this class has been given value, just like, subscribe, drop comments. Structure first, entry second. Structure first, entry second. Structure first, entry second. I'm Joseph Samuel, and this is SA Forex Academy, training Forex traders with skills, wisdom, and integrity. God bless you, and see you in the next class.